Hello, hello, hello. What's going on, everybody? Welcome to Stock Trades. How's everybody doing today? All right, so check this out, guys. What we're gonna do is I'm gonna just kind of lightly go over the data, and because there's there's a couple things that have come to my attention with this data, and I'm trying to dig a little deeper so I can figure out kind of what's the price target. So for all of our lifetime members and all of our stock terminal members, after the earnings report, we're going to end the live here and we're going to go to the Discord and we're going to open up a live there, and then we will join with inside the Discord terminal. Okay. We'll go ahead and do the live there. And right now we'll just go ahead and talk about just surface level, gain some knowledge, see some questions, and then we'll go ahead and end the live and we'll go talk about it inside the private Discord terminal. But what I want to do just really quickly is Clover has grown approximately 30%. Free cash flow is negative, right? And my job right now, I'm trying to figure out is why is it negative and what did they do differently? So big thing here is that let's see. So 103,000 members, 30% revenue growth, $462 million in total revenue, 33%. We got a GAAP net loss of $1 million, meaning that they are getting to a point of profitability and they're at break even. This encourages me that they're going to be profitable in 2026. Compared to a GAAP net loss of 19 million from last year. So they only lost $1 million this quarter. So they have enough for sustainability, right? They have enough to last for a very long time, right? So that's really good. Obviously, the revenue metrics hasn't really changed, but overall, we are going to get around a 37% growth. It's just Q1, I think they performed well last year. This is stuff we already know. I'm going to skip over it. They're reporting burnout, which is a slight tick up, but remember MCR is always about 600 basis points below. The big thing I want to talk about here, guys, is the cash flow statement. So that's the balance sheet here. Where's the cash flow? So as you can see right now, we got about net cash provided by operating activities. It's negative 16 million. Likewise, they did a repurchase of the common stock. So they bought back $18.2 million of shares. So they bought $18.2 million. So they essentially bought the dip. Right? So they essentially bought the dip. If you compare it to last year on the 3-month end, it shows nothing because they didn't buy the dip in Q1. Q1 of 2024, they announced that they're going to be buying the dip, right? So the repurchase of common stock, they just bought 18.2 million. So if you add 18.2 plus, what was it? I have it pulled up here. This was from Q2. This is Q2 2024, is 1.77 million. So if you add that 1.77 million, they just bought 19.97 million of their stock back, meaning they only have like, I don't know, 0.03 left. It's nothing. They did pretty much majority of their buyback. So they bought the dip. So that should signal to you that that dip around $3 was, the low, and they believe that they are going to go higher, which is why, I am, the stock price is at $3.40 now. So, which is why I'm thinking deeply about this because if you look at this, if you look at right now the cash flows and analyze this, you add up all the positives and negatives, and you ultimately get a negative here. Okay. So the question is, line item by line item, you have to ask yourself, because last year they were positive, and then they had that discontinued from operations to get to 25. Where is that 25 coming from? It was from Q1. They got 25.49. So we have to look a little deeply and see, because this went down. So that's interesting how that went down. So that's good. This went up. This went down. So we got to figure out which one went up and figure out the difference here. Unpaid claims. Okay. Unpaid claims. So let me know. I'm curious. What were the unpaid claims? So 63 million off of the 20 million loss. So I'm just looking at that right now. So what we're going to end up look at other revenue. Oh yeah, I saw that. That could potentially mean SaaS. Absolutely. I saw that. We're going to go in deeper into that. So what we're going to end up doing right now, we got about 199 people watching on Twitter and about 231. To respect the live and to make the live short, we're going to go ahead and just focus on the earnings call. What we're going to end up doing now is we're going to come together on the Discord for all my lifetime members and stock terminal members. We're going to go ahead, we're going to come on the Discord, and we're going to talk and kind of break this whole thing down, okay? So we'll go ahead and do that, and then let's see what's going on. All right, so let me see. What time is it? We got 10 minutes. So I got 10 minutes to look at this right now. I haven't had time to look at it, so let me think. So what I'm trying to do is look at they don't give me a cash flow statement in Q1, which is unfortunate, but oh, another thing I want to point out really quickly. Hey Michelle, do me a favor. Can you lower the AC? Please, it's like freaking hot in here. Okay, so let me think. Oh yeah, one more thing I want to mention. So they bought back 18 million. And look at the treasury stock acquired. So last year they acquired 3.3 million, right? 3.3 million of acquired treasury stock. Now listen. So they got treasury stock 3.3 milli. Okay. So if you look at Q1 of last year, they don't give you a cash flow statement. So you couldn't figure out, you have to do reverse math to see it's 3.3. It goes back to yesterday's video. So to figure out where that 3.3 is, you go to our terminal. You can see the where to go. Q1 3.36 right here. 3.36. So that's what that is, 3.36, and they just round up. So what that tells you is they got another 13.6 million in treasury stock. Okay? So another 3.6 hello. They got another 13.66 million. Now, I think what is it? 6, another 16. 16 plus 6. Yeah. So if you take 13.66 plus around 30, they have right now 43.66 million in treasury stock, which obviously comes off a contra equity. If you don't know what that means, I recommend doing more research on it, okay? So now that's that. The goal now is to figure out unpaid claims. So it was positive in Q2, but like last year was positive. Yeah, last year was positive. Okay, let me see here. And then last year, so Q2 became negative, became positive. Unpaid claims, positive. Interesting. Positive. And then Q4, this will give us the whole year. Unpaid claims are 19. Yeah. Okay. No, I know. I agree. I see that. So what I'm trying to do now is I'm trying to figure out is are the unpaid claims going to be a hit in Q2, Q3, and Q4? Because if they are going to be a hit, then we have a problem, right? Then we have a free cash flow problem. Okay. So that's what I'm looking at right now. So while they do the earnings call, I'm gonna do my magic and just kind of because if I can figure out the free cash flow, I can figure out the stock price. I can figure out what it's worth because it's you could do 5% of the revenue for sure, but I want to be a little bit more accurate. I want to see if this is going to be a consistent theme. So that's going to be what we're going to be doing right now. So let me go ahead and let's sign us up into the whatchamacallit, investor relations earnings report. Yeah, so be right. I need you to do some due diligence on this. So the whole point about intrinsic values, you got to predict if how many birds are going to be coming out of the bush. So if we can figure out this, ideally, we'll see though if this is a one time because remember they did do about $18.2 million in purchases, and the question is they also did 13. They also did 13. They also where the hell did it go? They also did 13.6 million in treasury stock. Now, was that from the RSVU vested acquired? They didn't have to buy those. They just got slipped into treasury stocks from acquisition of not meeting benchmarks, or did they buy that straight up cash? We know that 18.2 million was straight up cash, right? So I need you to do some due diligence on this right now to figure out. You got to look at Q1, Q2, Q3, and Q4 of last year. We got to figure out kind of what the hell this unpaid claims is and see what they can do to offset that free cash flow. The biggest thing is it's 18.29 million they bought. So if you take 16.6, so if you take like 18.297, we're going to do this in the live on the Discord, okay? We take 16.29, we get $2 million of free cash flow if they didn't buy back their shares. Okay, but I don't know. It could be more. It could be 16 million if you include the treasury stock, but I don't know if they bought that. Okay. So, so it's probably 2 million free cash flow. The question is, that's a depreciation by a lot from 25 to 2. So that means we're losing 16 now. If we amplify this on all metrics, then we could get, let's say, a reduction, because it was only $5 million of unpaid expenses. It was only $5 million, but yet our operating cash flow is still 33. So we got to figure out what happened here. Okay. So I think if this is going to be a hit on the OCF of Q2, Q3, and Q4. So that's going to be our homework, right? That's going to be the magic right there. Right? There's going to be a lot of retail investors. They're going to be emotional. They're like bobbleheads. Okay. Just let them bobble, because this is going to help us, because then we're going to know whether we can activate the wheel strategy so we can squeeze. You know what I mean? So we can squeeze money out, while the other people, they don't know. They're just going to be buying calls. Okay. So with that, let me figure this out here. Okay, yo, you'll catch up. That's perfect. That's perfect. Let me see. Earnings, webcast. I'm just looking at the webcast, guys. Now, all right. Okay. All right. Let's see. Operating cash flow, negative. In comparison to 2024. All right. Are they live yet? Let me know if they're live. Just let me know, okay, guys? Let me see this here. Accrued retrospective premiums decreased. Q1 2025 saw $43.5 million outflow from changes in accrued retrospective premiums. Only a small outflow of $2.0 million in Q1 2025. A reduction of $5.4 million in unpaid claims in Q1 2025, compared to a $102.4 million increase in Q1 2024. This was a major swing contributing to lower operating cash flow in 2025. Accrued salaries and benefits increased by $11.4 million in Q1 2025 versus $7.4 million in Q1 2024, slightly helping. So in the earnings call, I want to know about the unpaid claims. They're about to start. No, I still hear the music. Is this a one-time issue? Wait. Serve as an increase to operating cash flow in 2024? Is that why they were positive? Yeah, exactly. So, given that it was negative this year, does that mean it'll translate to Q2, Q3, and Q4 of 2025? Not necessarily. A negative operating cash flow in Q1 2025 does not guarantee that Q2, Q3, or Q4 will. Q1 cash outflows, like reductions in unpaid claims and increases in accrued salaries, might be seasonal or time-based and could reverse it later. For example, if unpaid claims increase. So it could be seasonal. So that's good. If it's seasonal, then we're going to be able to figure some stuff out here.
Adjusted EBITDA was $25.8 million. The Q1 2025 cash flow dip looks like a temporary working capital drawdown, not a structural problem. Later.
Do they talk about why unpaid claims were down? Let's see the still music.
It should allow the processing is back online, but we have to catch up. The Change Healthcare ransomware attack, which began on February 21st, 2024, significantly disrupted the processing of medical claims across the U.S. healthcare system, leading to a substantial impact.
Got it. Okay, so we got to play catch up. Hopefully they talk about that. Thank you, Sean. By the way, Sean is Dish. Oh shit! Never mind. Acorns. I said, is a Dish Acorns. You changed your name. I always forget. That's the big one though. That's the big one. That's the big one because we got to predict the free cash. It's starting. Okay, I got to listen to OCF. Got it. Let me know if you listen. Can you hear?
Joining me on our call today to discuss the company's first quarter 2025 results are
Can you
Andrew
hear?
Toy, Clover Health Chief Executive Officer, and Peter Kuipers, the company's Chief Financial Officer. You can find today's press release and the accompanying supplemental slides, as well as the company's most recent investor deck in the Investor Events and Presentation section of our website at investors.cloverhealth.com. This webcast is being recorded and a replay will be available in the Investor Relations section of the Clover Health website. I'd also like to caution you that we may make forward-looking statements during today's call that are subject to risks and uncertainties, including expectations about future performance. Factors that may cause actual results to differ materially from expectations are detailed in our SEC filings, including in the Risk Factors section of our most recent annual report on Form 10-K and other SEC filings. Information about non-GAAP financial measures referenced, including a reconciliation of those measures to GAAP measures, can be found in the earnings materials available on our website. With that, I'll now turn the call over to Andrew.
All right, everyone. Thanks for joining us today. I'm excited to dive into our first quarter 2025 results. We've been working hard at Clover, and it's really showing in our Medicare Advantage performance and overall business growth. Let's break down what we've accomplished and why it matters. First, let's talk about MA plan growth, where we're doing very well. We've seen some significant numbers this quarter. We're looking at a 30% jump in MA membership, 33% growth in our revenue, and a whopping 279% increase in adjusted EBITDA year over year. That's not just numbers on a page, that's real momentum. And what's driving this? It's our focus on getting people the right healthcare right when they need it. Earlier, higher quality, and critically more affordable. This isn't just about growth for growth's sake. It's about making a real difference in people's lives by lowering barriers in care, whether it be by reducing out-of-pocket costs or delivering care to them right in their homes. We even released a new white paper last week showing how Clover Assistant helps better manage congestive heart failure, leading to better care and fewer hospital visits. That's the kind of impact we're aiming for. Next up, let's discuss our confidence in the rest of the year. This quarter's performance really reinforces that we're on the right track to hit our full year 2025 goals and improve guidance. We had a strong enrollment season, and those new members are utilizing care at expected levels. That's key. We're planning to keep this momentum going throughout the year. But what's most important? It's how we're taking care of these new members. We're using Clover Assistant to power their primary care, making sure they get the best health outcomes and the most efficient care. This isn't just about enrolling more seniors. It's about making sure we look after them in the right way. Now, let's talk about how we're managing things behind the scenes. Our Part C and Part D utilization costs are both tracking as expected. We are also navigating the HEC V28 phase-in smoothly with Clover Assistant. Why is this important? because it shows our technology-first care model is adaptable and can handle changes in the industry. We're not just reacting, we're staying ahead of the curve, making sure our members get better care management. That's a huge advantage for us. A big part of our confidence comes from our control of our care model. Whether in the wide PPO network with PCPs using Clover Assistant or via home care in our Clover Care Services division, care is what we do. Speaking of Clover Care Services, our mission is simple: to deliver additional support to Clover members when and where they need it. Every Clover member is eligible for a personalized in-home Clover Care visit and coordinated care services tailored to their health journey. We work closely with Clover Assistant using physicians to identify members needing support and deliver that support directly to them. For example, our Welcome Home Clover Care visit helps members transition from hospital inpatient stays. For members with the highest needs, we offer a comprehensive in-home care program focused on palliative and advanced illness support. These services drive strong performance for our health plan and provide tailored, personalized care for our Clover members. We're also pleased about the recent CMS final rate notice for 2026. It's a positive for us and will add to our momentum, especially with our 4-star PPO plan coming next year. But let's be clear, our real strength is in our architecture and in our operations. It's in our innovative care model, our wide networks, and the clinical and financial results we get from Clover Assistant. I've spoken about this before, and I want to emphasize that we would feel good no matter what the rate notice was. That's because we're not just relying on favorable rates, we're building a solid foundation for long-term success. Looking ahead, we see even more growth and profitability coming in 2026 and beyond. This isn't just wishful thinking. It's based on our strategy of expanding Clover Assistant's reach, managing our members with personalized care, and the financial boost we'll get from our 4-star rating. It's too early to talk about bid specifics right now, but our intention is to keep building a growth flywheel, and we expect it to start spinning much faster as we go into next year. And for areas where we don't have an MA plan, we're pushing forward with Counterpart Health. We're seeing a great opportunity here to partner with others and bring Clover Assistant to even more people. We're already working with several partners, and we have more in the pipeline. Organizations are seeing the value of Counterpart Assistant in improving care and managing costs, and we believe this is a big area of growth for us. To support this growing deal flow, we are actively taking steps to add implementation resources to ensure successful onboarding and integration for our partners. I'm excited about traction in this area, and I think the opportunity to bring CA to many people served by other MA plans is a very real one. Finally, I want to highlight the real-world impact of Clover Assistant. Our research shows that doctors using Clover Assistant diagnose chronic kidney disease and diabetes earlier. And we just released our latest paper on congestive heart failure, showing that Clover Assistant usage is associated with better care, fewer hospitalizations, and fewer readmissions related to CHF. Heart failure is a huge issue, and we're making a real difference. We're giving our doctors the tools they need to provide better care, and it's showing in the results. So, to sum it up, we've had a fantastic start to 2025. Our approach, powered by Clover Assistant and our home care program, is driving strong growth in membership, revenue, and adjusted EBITDA. We're confident in our 2025 goals and excited about our future. Now, I'll hand it over to Peter for the financial update.
Thank you, Andrew. First, let's start with the results, and then I will cover the drivers in more detail. I'm very pleased with our strong first quarter performance, where we have delivered a combination of 30% membership growth and 33% total revenue growth, while growing adjusted EBITDA by 279% and adjusted net income by 322% year over year. We are executing very well against our strategy. Let's now move into the drivers. Starting with membership and revenue. Insurance revenue grew by 34% year over year to $457 million, driven by 30% Medicare Advantage membership growth from strong AEP and OEP enrollment seasons. Member retention was also strong during both the AEP and OEP season. Our first quarter results give us conviction in our new member cohort management strategy. Similar to AEP, the majority of our OEP growth occurred in our core New Jersey markets, where we have a strong Clover Assistant network presence. During the quarter, new members were effectively onboarded, and our results demonstrate strong management of both our new member and profitable returning member cohorts with performance in line with expectations. This is reflective of our pricing discipline, geographic growth strategy, and our efforts to proactively engage with new members via Clover Assistant powered primary care. Given our experience over the last number of years, we have strong conviction that the unit economics for our new member cohort will improve, as we've seen on average a more than a 700 basis point improvement in loss ratios between year 1 and year 2 cohorts, and an approximate 1,500 basis point improvement between year 1 and year 3 cohort members. This demonstrates the effectiveness of our model over the long term by providing earlier and better care management at a lower total cost of care. Overall, we are confident that our medical costs are in line with expectations. We experienced elevated inpatient utilization in January from an uptick in lower intensity care related to a later cold and flu season. However, trends quickly normalized starting in February and continued through March. Operationally, we continuously perform checks into our data and metrics via prior authorizations, weekly claims, and real-time Clover Assistant insights from provider interactions to identify patterns in our utilization. Focusing next on SG&A, I'm pleased with the operating leverage that we are demonstrating. This quarter, adjusted SG&A as a percentage of total revenue decreased to 18% of revenue, representing an improvement or decrease of 360 basis points year over year, while absorbing the increased growth and variable costs associated with higher membership and our continued strategic quality investments into our business. Our profitability metrics are strong. GAAP net loss during the first quarter of 2025 improved by $18 million year over year to a loss of $1 million. First quarter 2025 adjusted EBITDA improved by 279% to a profit of $26 million. Similarly, adjusted net income grew by 322% year over year to a profit of $25 million. Lastly, insurance VER for the first quarter 2025 was 86.1%, which represents a modest increase year over year, but importantly, is in line with our expectations and consistent with our full year 2025 guidance given seasonality. We also note that one driver of the year-over-year increase in insurance VER was the implementation of our CA-enabled affiliate entity within our operating structure, which the plan now employs to engage providers directly and better service our health plan and membership in New Jersey. The goal of this entity is to drive higher quality and better health outcomes for our members via better care coordination services, unified care management, and a deeper focus on our partnerships with local physicians. Overall, we're proud of our strong results this quarter. As we look ahead to the rest of the year, Please note that we expect typical Medicare Advantage seasonality trends in the form of higher utilization levels in the back half of the year, with more of an impact in the fourth quarter of the year as is typical. That said, this is simply seasonality. Our first quarter performance reinforces our conviction in our improved 2025 guidance, which I will cover later in this call. Turning next to the balance sheet, we are pleased to announce that during the first quarter, we have successfully repurchased 5 million shares of common stock, making up the remaining $18 million authorized under our buyback program announced in May of last year. This strategic decision reflects our confidence in the company's long-term value and the strength of our balance sheet. We ended the first quarter of 2025 with cash equivalents, and investments totaling $391 million on a consolidated basis, with $126 million at the parent entity and unregulated subsidiary level. Our unregulated cash was impacted by various working capital and timing dynamics, as well as the stock buyback program. We're confident that this balance will increase throughout the year, allowing us to operate from a position of strength as we invest in our growth model. During the first quarter of 2025, cash flow used in operating activities was $16 million and was similarly impacted by working capital and timing-related dynamics. That said, given our business momentum, we continue to expect to be on pace to generate strong cash flow from operating activities for the full year. Days in claims payable was 37 days as of March 31st, 2025, representing a decrease of 22 days sequentially. This reflects the normalization of our claims inventory and timeliness of claims payments to historical levels. If you recall, at this time last year, we were simultaneously navigating the industry-wide Change Healthcare incident, as well as the transition to our back-office BPaaS Medicare Advantage ecosystem. We're pleased to report the successful conclusion of this and expect our claims payment patterns to now be at typical go-forward ranges. For our full year 2025 guidance, we believe that we are well-positioned to accomplish our goals this year and are providing the following guidance update. We are reconfirming our Medicare Advantage membership to average between 103,000 and 107,000 members, reflecting 30% growth year-over-year at the midpoint and continued intra-year growth through the SEP periods in 2025, all driven by our robust plan benefits, competitive positioning, and our 4-star rating. We are also reconfirming our insurance revenue of between $1.8 billion and $1.875 billion, reflecting year-over-year growth of 37% at the midpoint of the range. In tandem with our membership growth expectations, we anticipate more revenue in the second half of the year as compared to the first half, unlike historical patterns. We are reconfirming our adjusted SG&A guidance to be between $355 million and $365 million. This represents adjusted SG&A as a percentage of total revenue of 19 to 20% and is an approximate 200 basis point decrease or improvement year-over-year at the midpoint of the range. We are increasing our 2025 adjusted EBITDA guidance to now be between $50 million and $70 million. Similarly, we are also increasing our 2025 adjusted net income guide to now be between $50 million and $70 million. Lastly, we continue to expect insurance VER to be within a range of 87% to 88%. In totality, as Andrew mentioned, we delivered strong results and a very strong start to the year. Throughout the remainder of 2025, we look forward to continuing to balance our strong profitability profile via exceptional core management, together with our strategic investments in new membership growth, Clover Assistant technology, and expanding both our Clover home care services and Counterpart Health go-to-market strategy. As such, we have increased conviction in our improved full year 2025 guidance, and we believe that we are very well positioned for accelerated growth and profitability in the future. Looking forward, first, we will continue to invest in growth and expanding Clover Assistant technology and reach to better manage our new and returning member cohorts. Second, we believe that we are very well positioned with tailwinds going into 2026 due to an increase to a 4-star payment year in 2026. Third, we expect a compounding favorable impact from the recent CMS final rate notice, which is additive to the impact of the improved 4-star rating. Fourth, we expect the unit economics of a large new cohort of membership added in 2025 to significantly improve in 2026 and beyond, as well as continued maturation of our broader returning member cohorts. Lastly, we believe that there will be a continued impact from our efforts to gain operating leverage. With that, let me now turn the call back to Andrew for closing comments.
Thanks, Peter. In conclusion, we are incredibly proud of our strong start to 2025. These first quarter results clearly demonstrate our ability to meaningfully grow membership, expand profitability, and execute our strategic plan effectively. Our differentiated model, powered by Clover Assistant and our clinically focused home care platform, is delivering tangible value and better clinical outcomes, driving our strong Medicare Advantage performance. We are confident in our improved full year 2025 guidance and are strategically investing in our growth model, managing our new and returning member cohorts and expanding Clover Assistant's reach. These efforts are not only enhancing our current position, but also positioning us for accelerated growth and profitability in the future. We remain excited about Clover's trajectory and are committed to driving long-term value for our members and shareholders alike. With that, let's open it up for questions.
Thank you. We will now be taking questions from Clover's research analysts. At this time, if you wish to ask a question, please press star 1 on your telephone keypad. You may remove yourself from the queue by pressing star 2. In the interest of time, we ask that you please limit yourself to one question and one quick follow-up. We will take our first question from Jonathan Young with UBS.
Hey, thanks. Thanks for taking the question here. Just starting with the insurance business first. Can you provide any color on how core medical trends are progressing there between kind of new versus the existing cohorts? And how are members hitting the out-of-pocket drug maximums? Is it trending in line with your expectations? And has there been any change in behavior there?
Yeah, thank you, Jonathan. It's Peter. So overall, cost trends are as expected. We also say that both the new members cohort and the returning members cohort are also, from an MCR and BER perspective, trending in the way, both in actuals and what we see in the coming quarters, as expected as well.
Okay. And then, we didn't hear much on Counterpart Health here. Just any color on, how that go-to-market strategy is progressing, if there's been any more bigger wins, and kind of as we look ahead, when can we start seeing contribution? Thanks.
Yeah, hey, Jonathan, it's Andrew. Yes, definitely remain excited about the Counterpart business, and we are looking to provide more updates on that as we go out throughout the year. We remind everybody that we are not necessarily intending to make announcements around every single deal that we make around there. However, we remain excited about it. All contributions, revenue, et cetera, will, of course, be in the consolidated financials as well. And we're going to be talking more about that as we proceed in the quarter. But right now, we're very focused on making sure that we improve profitability in the insurance segment.
Once again, if you would like to ask a question, please press star 1 on your telephone keypad now. We will go next to Matt Hewitt with Craig-Hallum Capital.
Good afternoon. Thanks for taking the questions. Maybe first up, and kind of sticking with the counterpart theme, have you had, some, I guess, feedback, or how have the initial implementations gone, and what are you hearing from those partners regarding kind of the key metrics that you would be looking for once the platform is implemented and they've kind of had a chance to use it for a little bit?
Yeah, thanks. So definitely what we're looking for and what we're aiming to do is to make sure that we deliver the amount of value within our counterpart customer base as similar to what we see within our own MA plan and within the providers that use the assistant within our own network. So that's what our aim is. That's the power of the software approach, is that we can develop the product. We can then use it to help manage care, to identify diseases earlier within almost any part of the Medicare population, whether it be under our own plan or whether it be with other people's plans, third-party plans. So the key KPIs that we're looking for there are, do we still see the engagement with the physicians? Do we still see the earlier diagnosis and management of diseases? Do we still see improvement on the HEDIS side of things? As we said, we're very proud of our performance there. It's all the same metrics that we use within our own plan, but translated into third-party counterpart usage. And our initial data, we feel optimistic on that, and our goal was that those would be effectively equivalent.
That's great. And then maybe shifting gears a little bit, given some of your success over the past, call it, couple of years, has there been any changes in the competitive landscape? Are you seeing some of your peers adapting or kind of shifting to your model a little bit more? Are you seeing any new competitive entrants, and how does that kind of change your game plan, if at all? Thank you.
Yeah, I think that what we see here is that we have been focused on the PPO and the wide network and managing care within that wide network for quite some time. And others have been focused, and it's perfectly legitimate as a model, through value-based programs within their network, deploying those out, but rarely with a software backing, right? Like, most people's development of software has been for employed physicians, it's been for insurance operations. And while those are both good things, the assistant, counterpart Clover Assistant, is usable by the broader, wider network. And that is a distinct moat and advantage that we have. So that's something we're excited to bring as a model to drive clinical value to lots of different markets, lots of different places. We think we can look after a large percentage of the total Medicare population in the US. And I think that what we're seeing is that others have struggled a bit on the PPO and are pulling back on benefits, are perhaps not really investing as much as they used to, cutting back on marketing, cutting back on commissions. And that is just a natural cycle of the market. We are staying the course. We feel good about where we are. We feel that our model is working. We feel that it is highly differentiated.
Got it. All right. Thank you.
Again, if you would like to ask a question, please press *1 on your telephone keypad now. We'll go next to Richard Close with Canaccord Genuity.
Yes, congratulations on a great start to the year. First of all, Andrew and Peter, you guys mentioned accelerated growth in the years to come. You talked about, the growth flywheel and expect faster growth next year. So maybe can you break that down a little bit? Obviously your positive rate adjustment for next year and then the 4 stars, but how are you thinking about the building blocks to growth, and where's the acceleration come from beyond, I guess, the positive on rate and stars?
Yeah, thank you, Richard. This is Peter. So what we see, of course, now that we have experience with a large cohort joining the plan this year, that's a reconfirmation for us to really see the cohort economics for both new members and then also the returning members. So that is a large factor as we look at unit economics and profitability going into next year. Yes, absolutely, the rate notice will be a tailwind, but with our model, we don't necessarily need that, if you will. We are, of course, now looking at bids, so more news to come there. so likely there'll be some adjustments there from a benefit perspective. And then, of course, we also have, the cost actions we've taken as well. We'll have more leverage from an SG&A perspective also. And then lastly, we believe that from our product roadmap, from a Clover Assistant technology perspective, we'll have additional impact as well, starting with the clinical side, and then, of course, the results flowing through to the financials as well over time.
Yeah, and then just jumping in here, obviously we are, as a reminder to all, is that we're going from a payment year. We're being paid on 3.5 stars this year, and we'll be going to a paid on 4 stars next year, which affects the benchmark. And so we're looking at what we do. As Peter said, we're still early on and we're not talking about bid just yet, but obviously we're factoring that into our bid discussions. Others in our might be moving downwards in our markets on the star rating, and so that will put some pressure on their benefits, whereas we think we have room as we are moving upwards. Another dimension on that, as Peter said, was a lot of that's being driven by CA. CA helps our star ratings. We are very proud. We're, the number one plan of over 2,000 lives on HEDIS under the star ratings. That's driven by our technology platform. We look to maintain that advantage going forward, which will help us with stars, which will help us with benefits too.
Okay, and I guess I have, or my follow-up is somewhat centered on New Jersey. First, in terms of New Jersey, obviously you have great penetration there, and I'm curious with respect to this accelerating growth, how you think about, are you bumping up on, where you can go in New Jersey, and then do you have to go to new markets? So that's one question. And then the second part of the question is, you mentioned this affiliated entity related to BER. If you can go into that a little bit more for us as well.
Yeah, I'll jump in on the first part, Richard. I'll let Peter take the second part. Regarding New Jersey, I think we have plenty of room to run. We have plenty of room within that market. We have our full platform deployed there. It's our home state. We feel a lot of affection for New Jersey. We have plenty of market share. While we're proud of the market share position we also have room to take on more market share there. So feel really good about where we are there. That doesn't mean that we are not going to look at other geos. That's not what I'm saying. I think we certainly will look at other geos. But because we are just right around north of 20% market share on non-SNP in New Jersey, we have plenty of room to go before we become saturated. And I'll let Peter take the second part.
Yeah, so when comparing BER year over year or sequentially quarter for quarter, a couple of things to keep in mind as far as drivers, right? So first of all, new members from a BER perspective are a headwind. That is then offset by returning members as well. Of course, we do have a somewhat elevated medics trend as well, but it appears that that is much lower than competitors that do not have a clinically technology-focused approach. There's a little bit of timing as well as far as PPD. And then lastly, going back to the CA-enabled affiliate entity, that we signaled, I think, last year that we were setting up, is really meant to drive higher quality and better care for members. So activities that entity is deploying include, for example, care coordination, care management, and also partnerships with local physicians. So that is a fourth factor if you look at both quarter over quarter and year over year BER.
Okay, thank you.
And once again, it is star one if you had a question. With no other questions, this will conclude the Q&A portion of today's conference. I would now like to turn the call back over to Andrew Toy for any additional or closing remarks.
All right. Thank you all again for joining us today and for the thoughtful questions. We appreciate your interest in Clover and look forward to updating you more in our next call. So have a great evening, everyone. Thank you.
Thank you. This concludes today's Clover Health First Quarter 2025 earnings call and webcast. You may disconnect your line at this time and have a wonderful day.
All right, guys. Let me go ahead and turn this off. Okay, ladies and gentlemen. So I'm very excited. Um, let's see. So Andrew Toy um, answered my question. I am trying to figure out I put my question on YouTube. Let me see if I can find the question to read it. So I gave Andrew a question. Let me see. Let me see if I can find it so we can talk about. We have a lot to talk about. Let me see if I can find it. Okay, so I pretty much said, you know, I said, okay, so for your convenience, I'm including it here. So I sent, sent it to the forum, and I went ahead and they were able to answer it on the call. CMS's final Medicare Advantage rates in 2026 landed at a notably higher average. So I pretty much said that is this going to disrupt? Is this increase? Well, let me just go ahead and read it for you, rather than taking shortcuts. So I asked them a question. I said, CMS's final Medicare Advantage rates in 2026 landed a notably higher average increase of 5.06%, resulting in effective growth rate now exceeding 9%. A substantial upward revision from earlier proposals. In Clover Health's Q4 2024 earnings call, Peter, the CFO, mentioned that a significant portion of new member growth heading into Q1 2025 was composed of switchers, individuals from whose whom medical data is already available, thus creating a strong immediate revenue base. Given the context from first principles perspective, could the higher reimbursement rate across the industry slow down the disruption curve that Clover Health has been benefiting from by making incumbents financially stronger and more competitive? More specifically, do you anticipate that the broader uplift in rates could reduce the magnitude of the strategic tailwinds that Clover Health has experienced? Let me see, thereby potentially moderating future revenue acceleration. Additionally, how should we think about the dynamics in light of the possible star rate revision and impact of competitive landscape? So he was able to answer the question, and I just want to, Andrew, if you're watching, I just want to say thank you. I really appreciate you answering the question on the phone call. So I really appreciate you. Thank you. You are you are amazing. I really appreciate you, Andrew. So I don't ask for a lot. I try to stay out, of things, and I just kind of, wait here and watch, and I trust in management. And I just want to say thank you for answering my question. So with that said, what was the answer? So if you guys don't remember, I thought you, so the answer was no. This is good for them. This is really good for them. They like this. It's going to be helping them, and it's not going to disrupt their moat, disruption. They also said that they could have done without it. They don't need it, but thanks, right? So that's really good. That's really good. So yeah, I appreciate you, Andrew. Thank you, Andrew. I appreciate you a lot. It means a lot, Andrew. Yeah. Yeah. So okay. It's JC. All right. Okay. So all right. So with that, I'm going to just kind of give you my summary. What was I worried about? As you can see, before the earnings call, I said that they repurchased stock. They completed all the stock repurchase, and obviously what I was telling you ended up showing on the earnings, right? It's because I'm not like a magician. It's because I understand how to read financial statements, right? And the point is, in our stock trades lifetime access, I teach you that, right? It's a very useful skill. right? Right. So there's that. So we talked about that. Now the other thing I want to mention real quick, just really quickly. This is pretty impressive. Shout out to all you guys. We got about 900. Let me show you the little thing here. We have about 979 people watching right now. About 671 from Twitter, 308 from YouTube. So that's pretty impressive, guys. I appreciate you supporting the channel. I try my best. I just did a 4-hour live yesterday, so I try my best. Okay, so this is what I was worried about when I entered the earnings call. I saw that they had negative 16 million of free cash flow, and I was like, "Oh no, what's going on? Like why is it negative? Like what happened?" And Peter, he even said it, he started chuckling probably because I was like, "Yeah." I was like, "Yeah." So Peter oh yeah, no, please do. If you can, please hit the like button. I know, like, it's just so like it means nothing, but it really does help the channel. I have a friend who's a YouTuber, and he was telling me I got to say that more often. So yeah, please do. If you're not logged in, don't, just relax, enjoy, don't do anything, right? But if you're logged in, I just tap that thing, right? What's the thing? Spin on that thing, right? All right. Um. So 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 Peter specifically said that this negative operating cash flow is actually a seasonality thing. Which, shout out to Dish Acorns, Sean. I appreciate you, Sean. 100%. Right. So smash that like button, spin on that thing, right? But really, guys, no, this is really good because it's a seasonality thing. And then Peter said that they're going to end up being operational cash flow positive. So what does that mean? What does that mean? Well, it means that there's a high potential they're going to be free cash flow positive this year. So the question now is, by how much? So what we're going to do is we're going to move this to our stock terminal, our Discord part, and we're going to go ahead and meet internally, and we're going to go ahead and talk about it and run the calculations and run the numbers so we can effectively see, the what's a good price target for the stock. Now this is a very good. So let me just so that we're going to do that. We're going to do that calculation in there. So for the folks that are watching lifetime members, get ready. We're going to set it up. So get ready. And for individuals that want access to this, we have a coupon code SAS, which gives you $1,200 off lifetime access. Thank you to our partners at Affirm and PayPal, so you can take advantage of that and be able to log in. And we're going to do it internally because I want to be able to see my lifetime members, and we can speak and have a one-on-one discussion. Okay. Yes. So Dr. Patel, the Discord, I'm going to so you have access to it. You've commented before. It's the green little lion. You click on that, and then there's a little video. Let me show you. There's a little video. What the hell are you guys doing here? Jeez. Man, you guys are hilarious. What the hell is this, guys? What kind of gift is this? What the hell are you doing? Man, you guys are crazy. Where the hell am I? Because I got so just okay. Yeah, there it is, right here. So you know how like there's the research edge, Dr. Patel? We're gonna go here. You just click this button here, and then we're gonna go live. Okay. So that we're going to go there, right? Because this requires some massaging, and it's gonna take us some time, okay, to massage us out, to talk. We have our beautiful MBA from Duke. We have a person from Duke. We have a finance professor. So we're all going to come together, and we're just going to sit. We have a physics professor. So we're going to sit down and really break this, really break it down. Oh yeah, absolutely, 3D machines. And this payment is the only payment you do, and then it'll cover all future discussions into the whole future and any discussions we have. And it includes all access to our stock terminal, everything. Yeah, absolutely. Absolutely. Thank you. Okay. So let me make some comments right now on kind of the process. So we have 5 million in other income, but we also had it about last year or two. So I can't really look too much into that. We have to see kind of what's going on there because they announced counterpart, around that time. So we'll see what that means. But I would say based off of the question from UBS asking about counterpart, he pretty much said, "Hey guys, I'm not going to give you anything right now. Even if we have partnerships, I'm not going to tell you. Right now, my job is to make the MA profitable." He's just pretty much sticking it to Wall Street. I'm just going to make this profitable. That's all I care about. And they are going to make, I mean, Andrew is focused right now, guys. If you don't understand this, let me just kind of basically look in the camera. And like when Joe Biden in his presidency said, "America, look in my eyes." All right, America, look in my eyes, okay? It's a Saturday Night Live skit. Jim Carrey, long time ago, right? It feels like a long time ago. But look in my eyes for real, guys. Like, look at me. All right. So this is very important. Okay. Andrew Toy is focused, right? This man's focused. I mean, this is like this is the CEO you want, right? This is like if you want an ideal CEO, this is Andrew Toy checks all marks. This guy is honest. He's a good man. I trust him. I trust him a lot. He's a very good management. I have to admit, he's a very good man. And Andrew, if you're watching, it would be an honor to invite you to future wedding if if the SEC allows that to happen, right? I don't know if it can because people are assholes and they like to sue and all these things, but it's fine. But I want to say he's a very good management, right? So this guy's focused on profitability. The fact that they have a GAAP net loss of just $1 million, that means that's like what, 4 million approximately. I have to look at all the other net losses throughout the quarter. In fact, let me pull it up on the terminal real quick to see kind of the net losses. So if you look at the net loss from last year, so Q1 was negative 19 million, and now it's negative 1 million. Q2 was 7.41 million positive. So we'll see what Q2 is going to be. And then Q3 is negative 9 million. So, I mean, crap, guys. If they're able to turn negative 19 to negative 1, then Q3 may be profitable. And then Q4, maybe negative 2, maybe negative 3 million. We'll see. But what I'm assuming this year, we may have Q2 and Q3 be profitable, and then potentially Q4 and Q1 obviously negative. So what I'm anticipating now is and I wish you can correct me, Andrew, if I'm wrong. I wish you can, but I get it, I understand, but I try my best, guy. I mean, like I'm in medicine. I'm trying my best to be able to help, right? Q1 was OCF and obviously FCF because you can't have a positive FCF without OCF. So OCF and FCF is negative, but so you have no dragons this quarter, right? And you have kind of a small little midget dragon, like a little bit of an egg, because you got -1 net income. But you got a little small little midget, a small dragon that's about to pop, right? Figuratively, right? So you have that, right? So that's the net income, okay? But then the free cash flow and OC operating cash flow, Those are no dragons, right? So that's because of seasonality. So there is a dragon there, right? And that's what I was worried about. And then Peter said it, and I was like, yeah, I was so excited because it's all about free cash flow. Now, whoever tells you this was a negative quarter doesn't understand stocks. They're not long-term investors. And I frankly, I'm done talking. I'm done responding to folks like this because I just don't have the energy. Right? I'm here telling you what I believe. If you can go ahead and learn from it. If you can't, if you don't, I'm in the United States. I don't know where you're from, but we got freedom of speech, and we got freedom to do what the hell you want, right? So you can you don't have to agree with what I say. In fact, I encourage you not to agree. So I believe Q2, Q3, and Q4 will be operational cash flow positive and free cash flow positive. Okay. And I believe Q2 and Q3 will be net income positive on a GAAP adjusted basis. And Q4 will be free cash flow. That's a good one. So this is what we're going to do on the Discord live. We're going to determine Q4 to see what that is. Okay. And we're going to use our intelligent AI model, the one that I paid $200 a month for, right? The ChatGPT Pro. We're going to use that. We're going to put all our heads together and, we're going to go ahead and massage this thing. Okay. No, that's when the payments come. Exactly. Yeah. So negative CFO. See what? What CFO? Positive CFO annual. Yes. Exactly. And by the way, Singh is a CFA. I know there's so many CFAs, CFO, chartered financial analyst. So he's the creme de la creme when it comes to financial analysis, right? But yeah, but Singh, you have to give it to me though. For someone who's a CFA, what do you think about my analysis? For someone who's not, I'm not a CFA, I'm not a CPA, right? I'm a DO double G. You know what I'm saying? Right? I'm a DO double G. It's great, right? All right. I had to put some Snoop Dogg in there. Okay. So yeah, the market's really interested because it prices it as price to sales. But what I'm seeing now as a shareholder, I'm very happy. And my prediction, and again, I'm not going to give you the numbers and all that's going to be part of our Discord, as I told you from the past. But I will tell you this. I believe now we're going to go up. We're going to be going up now. We are not going to go down. If we go down, I will cut off my arms. Okay. No, like everyone, all my mentors, what? You need them. No. Right. No, seriously, guys. It's like a Middle Eastern statement. It's like, but yeah, it's a Middle Eastern it's a, maybe it's not applicable to, American English, but it's like, what are you going to do? No, for real though, guys. What I'm trying to say is you only need one. You only need one, right? And who knows, maybe Andrew Torrey can do some stem cells. We'll be fine. Sit back and enjoy. Exactly. Pretty much. So exactly. Exactly. Yeah. Send the rocket ships, right? Just give me some freaking rocket ships, right? Because I'm going to explain to you why. Okay. This is a very bullish quarter. I looked into it. That's why I was late on the live. I was like, wait a minute. Something's not right here because they're hitting all the pieces. This is very good. This is incredibly bullish, guys. Like, I'm so freaking excited. So my prediction, and I usually don't like to give predictions. My prediction is that, you know how we just finished Q1. Q1 is in May, and I don't know, like, August. I think August, September is going to be Q2. I mean, let me see. Yeah, August 5th, plus or minus. That's going to be Q2. I believe from now until August, we are going up. We're going up. I don't like to give predictions, but in the short term, based off of fundamentals, we're going to go up. Now, let me give you a just asterisk. cash at the beginning is a lot lower than cash at the end. So we lost cash. Well, that's because we bought back shares. Second asterisk. Stockholders' equity actually went down this quarter. It went down. Not good. It went down. Okay. That means theoretically the stock price should go down, right? But the reason why it went down was because of seasonality. Okay. And the reason why OCF was negative was because they also bought some shares. So what does that tell you? When a company buys back their own stock, what does that tell you? So once they submit the formal documentation, I'm going to know at what prices they're going to buy. And we're going to see maybe they submitted them already. And we're going to go in, we're going to dissect them, we're going to eat them, we're going to make some carne asada, we're going to make some pico de gallo. We're going to go inside the live, we're going to go really deep into this, guys. Okay? We're going to see at what prices they bought. But what this is telling me is that, they just, every price that you saw right now of Clover from here on and then has been bought. Okay? So that's confidence. Likewise, you see a increase in treasury stock, 13 million, which is should add it to 30 million. So what does that tell you? So this is beautiful. And you can take it off of contra equity, which is why the stockholders' equity is down. Okay. It's a bit complicated. It's hard to explain without having a freaking whiteboard and all these things. You know what I mean? It's hard to explain. This is very tough stuff. Okay. Accounting. All right. Accounting is tough. Right, okay. We're gonna take off my hair when I was taking the damn accounting class. I got an A though. I can show you. I can take you a screenshot. I got an A. Right? I thought I was gonna fail that class, dude. Let me just say there was a big curve. Somehow I got an A. I was like, holy shit. No, I did good, but it was hard. I had to work for it. I mean, I felt like the whole world was falling down, dude. It was like you only had like 50 minutes, and you had to do like this is some bullshit. You had to do all by hand, all by hand, no technology. He's Indian professor. I mean, these guys, these guys are very hard, man. He whipped my ass. I'm trying to remember. He had me completing an income statement, balance sheet, and cash flow statement. 2 easy companies and 1 hard one. We're talking like a legit hard. I had to do all like what you basically see in the reporting schema for these businesses. I was doing that on my exam. Like, holy shit, that was tough, right? But hey, look at me now. I mean, I run a platform with, about 300 people have been signing up. Yeah, but you guys haven't been integrated. So I don't please integrate, because that's where the live is. You're missing out. But we have I'm running 600, 700 people on the platform, which is insane, right? All right. So let me go ahead and let me look at the comment section. Yeah, if you don't like spaghetti and meatballs, why don't you get the hell out of here, Big Daddy? I'm a fan of Al before the gray hair. Yeah, guys, you get old. You get old, but it's okay. It's okay. Life is beautiful, right? What does the dragon mean? Yeah, I know people up on here are like, what the hell is this guy talking about? Wait a minute. Are we not talking about AMC? I was talking about Games of Thrones. Wait, is this Clover? I'm kidding. Okay, so can someone explain it? Dragons are positive. Oh, yeah, okay. So Michael Vaughn. What a dragon is. So if you look at Palantir, Carvana, CVNA, Tesla, Enphase, AMD, Clover, right? There exists a trend where Warren Buffett and the disciples before him, Benjamin Graham and all the people that he taught, the argument is if you look at and invest in a company that is generating positive free cash flow and net income, the share price will appreciate subsequently, right? If you invest in a shitty company at a cheap price, it's still a shitty company, right? So to essentially get the 3-headed dragon, which in our stock terminal, we use our data that we have. And let me show you kind of what I'm talking about. This is our proprietary stock terminal, right? And it gives you, like here, if you go to annual, you can see that Clover for the first time, let me remove this, is operational cash flow and free cash flow positive. They're still net income negative. However, they did turn net income positive here in 2024 Q2, which you can see here. Okay. So there's a little trick that you can do, and ultimately it will give you, it's how you find 10 to 15, baggers. We're still going to be waiting on Q. They're going to release it, and we're going to get that. There's enhanced AI analysis, et cetera, et cetera. But the big thing that I want to point out, ladies and gentlemen, if I have the honor here, let me see if I can, let me see if I can get it to you here. Is if you look here and go to Clove, the big thing I'm looking at, guys, it's this is not rocket science. Look at how many investors has actually, screw this. Let me just do 25 years so you can see. Obviously, it hasn't been 25 years, but you can see the trend line has broken out. There's more investors in institutions buying Clover. The total invested has been increasing. Ownership percent has just broke out of the downward trend line. And if you don't think that's good, look at the increased positions. People that have already bought Clover are buying more Clover. Okay. And we're still waiting on Q1 results. So this is very bullish. And this is all part of our, as you can see, our brand here, Al Stock Trades. I created this, right? So with that, I also created the analogy, the triple-headed dragon. And it's essentially, OCF, FCF, and net income gap, right? So that's kind of when you hear about dragons, you're like, what the hell is this guy talking about? Please tell me more about the midget dragon. The little small dragon, the negative 1 million. It's still a baby. Someone explained it. Oh, good. Okay. Well, I'll just, in case someone missed it. Because I don't think these comments show up when on the replay, which is unfortunate. Gray better than bald. The sad part is I am balding a little here, and just a little bit here, but it's okay. I mean, it's this, I got it. Maybe I got to take some vitamins, maybe AI can help me on, maybe AI can give me some, recommendations, but it happens, the biggest thing, listen guys, the biggest thing is in 100 years, we'll all be dust, right? So the biggest thing is I know it sounds very sad, but the biggest thing is what have you done to help? Right, that's the biggest thing, honestly, with the time you have. That just makes sense in my mind. Obviously, we'll have some fun, but it's good to give back. I like Al with gray hair. It makes me trust him more as a doctor. I do. That's so true. That's so true, though. Gray hair, yeah. And the sad part is the stock market didn't give me gray hair. It was medicine. Yeah, there's a lot of studying. Yeah. It's okay. Dad, hang up with this and come home to the group, please. Dad. All right. I'm coming. All right, I'm coming. We're gonna go to the group. Okay. Yikes. Right. I know, poor people, for real. Get off the chat. Everyone buy the platform. Yeah, get off the chat. Everyone buy the platform. You guys are hilarious. Yeah, okay. Yeah. Again, so we're gonna go ahead, go to the platform. I'm gonna go drink some water and fill up on this coffee here, and then we'll go on the platform. But overall, I'm very bullish to this. I'm gonna see Q2. I think we're gonna slowly start creeping up. I do think we bottomed out. The fact that they repurchased and bought stock, it really shows me, right? It shows me that they believe that this is the bottom, and that's why I was like, holy shit. And if you look at overall, a lot of people were arguing, oh my god, Clover Health, their shares outstanding is 510. Oh my God, right? They were like yelling and crying, right? Well, it went to 505 because of the treasury, right? And now they got more, right? So now what is the shares? The shares now is 497, up from 486, but a lot has happened. So let me just show you kind of an example, just very quickly, just so people, because I get comments, So 497 and 486. So let me exit and let me exit. Let me go. Oh, Jesus Christ. Let me go to our price, target software, and let me just kind of give you an example. I'm not going to calculate right now. This will be part of our internal discussion, but let me just show you. This is 510. So let me show you the difference. This is 497. Let's do 497. Okay. I need you to look at the bull case. At the bull case is $5.36. Last year, they were at $4.86. So let me copy this so I don't forget the number. So 536. And now I'm going to enter the 486. So bum. It went from $5.48 and it decreased to $5.36. So the difference is 12 pennies. I mean, if you're going to argue about 12 pennies, then what the hell, right? So that, again, it goes back to intrinsic value, and it goes back to what we've been talking about, okay? Let me see here.
Cost of a better. Your means they believe the price might
Let me see here. What is it?
The fact that they wanted to buy back shares at these prices at the cost of a better. Your means they believe the price might never. It is cheap again.
Exactly. It tells me that I think Q2 is going to be profitable and they're going to shoot up. And I think the market's going to sense that. And I think institutional ownerships are going to continue buying up. So there's going to be a lot of retail investors. And in fact, this is why I don't want to say this on the live. I want to keep it internal in our group because these are hard paying members. I love you all that have supported the Lifetime Access platform. You all deserve the best. And we're going to sit down. We're going to do a really deep dive. Okay. Oh yeah. That'll be another live. I'm gonna look at that. They're better getting.
Viewers down at 5:09 p.m. People are getting restless on video chat, talking about sticking you with a needle. Hard.
Oh shoot, yeah. So people are getting restless. They're about sticking me with a needle. Okay, that's it. Okay, guys. I love you all a lot. If you haven't done so, this is the platform. If you guys want access to it, it's SAS, coupon code SAAS, not ass, right? SAS, and it's and it's $1,200 lifetime access. You can use Affirm, PayPal, whatever, and essentially you'll get access to everything we have, over 2.5 billion outputs of institutionally graded data, and you have access to people that have over $44.5 million of net worth. And there it is. God bless you all. I'll see you on the next one. And this was a successful earnings report. And we're going to go ahead and continue our analysis. And I'll be going to the internal live on the Discord in about 5 to 6 minutes. I'm going to just go wash up, drink some water to hydrate, and then I will see you there. Okay?